Now, our main focus point on InvestTalk today was about the Japanese government bond market and how yields on the longer dated securities, specifically 30 and 40-year bonds, are hitting all-time highs. And this threatens what is called the carry trade, where investors borrow in Japan at low rates and they go invest in foreign markets, especially the US market, earning higher yield, whether that's bonds or equities. And this has worked for a long time. In addition, they've seen currency gains where the dollar appreciates against the yen. But recently that has shifted. Why? Because the gap between the yields in Japan are now and in the US market are now a lot smaller than they used to be. And so that is precipitating what happened in July, but more in a persistent manner. And this could be a big drag on bond prices, meaning higher yields, as well as equity prices, because a lot of them are invested in the Mag 7 tech stocks, because that's where you get the biggest bang for the buck, the biggest juice in the equity markets for the biggest return. And they were chasing a lot of that return. And so if yields continue to rise in Japan, which they have been, because of higher inflation there, and the dollar continues to depreciate against the yen, and a lot of that has to do with Trump policies around trying to bring manufacturing back and trying to devalue the dollar to make our goods more competitive here. That is a recipe for persistent underperformance and a persistent decline in both equity and bond prices.